All right, let's get down to the New York Stock Exchange. Jim Cramer is standing by. And Jim, if you thought you were going to get to rest on this last day of the week, forget about it. Here we go again.
Right, but I do like the fact that we're opening down. And you need help to be just go away. You don't want no hope and no help from any of the companies. In other words, that Apple doesn't help, that's fine. Chevron, I thought your interview with Mike Wirth was great. Obviously, the numbers are really good. But I'm looking for a day where people just say, I give up. The advanced decline line, more decliners than advancers for 10 straight days. That is the longest in 20 years. Obviously, we're just bear marketing our way, barreling through price target cuts. And so you probably get in the old days, we used to have, like, say, in the 1990, 1992 period when we had a problem, obviously, with Iraq, Kuwait, we used to get good covering on Friday. People would be afraid to go in short over the weekend. Maybe that's kind of where we might be.
Although you just said a couple of words, we're barreling our way into bear market. You think that's where we wind up? Because right now the NASDAQ is 17.5%, not quite in bear market territory. The S&P is only about 10%.
I know the S&P is going to have to come down a little more. It's hard because a lot of the S&P companies, the Dow companies in particular, reported great numbers. Yeah. But we have to have a total give up, and I still think that we haven't had the give up that I'd like to see. We're starting to get it. I mean, it's very interesting because, like, Dow stock Visa, fantastic. Dow stock Apple, fantastic. You know, Chevron actually was good, as Mike explained it on your show. But we have to have these stocks go down too. And when they all go down, then I think we finally get a bottom. But it may be a December 2018 bottom without the Fed, because Jay doesn't have enough wiggle room this time. But it's clear that we're in a phase where people just say, get me out. And that is, you've got those periods of denial, and now there is just acceptance. And I think people are going to say, I can't take it anymore. And the I can't take it anymore phase is going to last a couple more days. We
spoke with J.J. Kinahan this morning, and he was talking about retail investors, TD Ameritrade, what they've seen. December, they were actually net sellers. And, if you've watched this before, you wonder if these new retail investors are going to stick it out when they're getting hit with their first downturns like this, correction territory, potentially bear market territory. Will they stay when it's not as fun, when you're not winning every day?
I don't think so. I mean, J.J. said that on the special we did. And what is really interesting is that a year ago, obviously, there was this revolution that didn't really happen. And now they're just people who say, get me out. I mean, look at the Robinhood, the makeup of their quarter once again is people who do options, and they do a lot of Dogecoin. And these people just can't. They're not going to get through this. They're just not, Becky. In the end, they don't get to the other side of the Jordan River.
Yeah, Robinhood, with their average monthly users dropping, I don't know, from 18-something million to 17-something million. And their answer is they're going to do longer extended trading days, because if you can't make up for it in new numbers of people coming in, you just have to get everybody there to trade more frequently. Does that sound like a sound strategy?
No. Look, they have a good app, a very narrow business. I mean, when I read that, I said, oh, they're giving away free beer. They have free beer. Everybody likes free beer. I mean, can we just please admit that our business isn't doing well? That would be much better. The app is great, but they're really the definition of what's happening right now, which is like, I can't take the pain. These are not seasoned pain takers. These are people who go on and they're thinking, these people right now are trying to figure out whether they should give 7.5. Right now they're thinking, do I give 7.5 to the Bengals? Do I take the 3.5? I mean, honestly, these people, it's no different.
Or do I take the long on Robinhood or on Apple or whatever other stock I'm watching today?
They're taking the under on Robinhood, okay, and they're going to take the Bengals. I think take the points.
Shepard Smith here. Thanks for watching CNBC on YouTube.